The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. Hope everybody had a wonderful week, and we're getting ready to go into the Thanksgiving weekend next week, which will be fun. By the way, the day after Thanksgiving, the Friday, the 29th, is the most positive up day of the market in historical terms. It's up about 78% of the time. It closes higher on the 29th, and especially in a big bull market like this, I'm sure it'll be closer to 100%. The first chart that I put, someone just posted MF Global ordered to pay $1 billion. Good luck with that, folks, boys and girls. Okay, I posted a chart of Tesla Motors because I just wanted to show you that the pattern that was there. We had a price objective down here right near where it's trading now, around 127. And I don't know if that's due to the fires or whatever had happened, but it's had a pretty severe correction from its high at 194. So we want to, just keep that in mind that if you want to buy Tesla, it's much easier to buy it now than it was at 194. That's for sure. We got the Dow up 50. The NASDAQ is down a little bit. The S&P's up 3 or 4. And the Russell is up a little bit, and we got gold down a little bit, so not too much else is happening around the world. I want to post a chart from Bloomberg. One of the reporters from Bloomberg did a chart on a comparison between the Dow Jones Industrial Average and the S&P, the Dow Jones Industrial Average from 1928 to 1930. And now it's doing the same correlation between where we are in May of last year to where we are now, and you'll see that they're relatively good correlation. The thing is that people don't understand what really happened during 1929 because not many people were there. What I did, folks, is I posted a ABCD pattern on the red chart, which is the 1929 market. And you can see there were two major ABCD patterns that completed, which was up around the Dow topped on September the 3rd of 1929 at 383. 6 weeks later, it was trading at 181. It then rallied for 4 months into April Fool's Day of 1930, into April of 1930, where it hit an area of 240. And from 240, the Dow at that time went down to 42, double digits, 42, and it bottomed on July the 5th of 1932. It had given up 92% of its gains from September of 1929. Now, that can never happen again because markets never repeat themselves, but that's what happened in history. We have some similarities. The fact that we have record margin debt right now, the fact that the market's been going ballistic for well over 7 months ever since we made that the January effect. Well, it's been 11 months because the January effect is when the Bradley model turned up and went into November the 4th, and since then we're 2 weeks into that, and the market is still going up. And so there's not a possibility of a rainbow in hell of this ever happening again. But I just wanted to post it to you to show you what has happened in the past, because people that don't look at history are usually bound to repeat it. We do have this margin debt situation going on where people are borrowing more and more money, and they should, because prices go up every day in the wonderful the land of Camelot that we live in here. We also have a situation where we have 55% bulls and we have 12% bears. That's only happened 4 times in recent memory, and each time it ended relatively badly, but this time it's different. I'm going to tell you a little story here, and this is, I hope, my good friend and mentor, Mr. Tom O'Brien, is listening, because I'm saying this with a great deal of sincerity here, and that is that if this market is higher in December, I'll have an announcement to make, but I want to tell you a story first about Bryce Gilmore. Bryce Gilmore is the smartest man I know with Fibonacci and sacred geometry of anybody I met in my 50-some years of doing this business. And I don't detract that from some of my friends that are listening, but they know how I feel about Bryce. Bryce knows the numbers. He might not be a very good trader, but boy, he flat out knows the numbers. And one day we were trading together in Pismo Beach, and he wanted to trade Treasury bonds, and he wanted to short Treasury bonds at 101.02, and he said, sell the bonds at 101.02 and put a stop at 101.03, one tick, which was 31.25. And he was Australian, so he couldn't have a commodity account in the country at that time. That was the early 90s. And I said, sure, I'll do it. So he wanted to do 8 of them, and so I sold 8 Treasury bonds at 101.02. But I told him, I said, Bryce, it's silly to put a stop at 102.03, because that's just a tick away, and you really can't you can't really do that. So he said, okay, put it at 102.03, because if they hit 102.03, he said, I am going to stop trading and take all these books that I have, go down to the Pismo Beach Pier, and throw them into the Pacific Ocean. Well, they never did hit 102.03. The high was 102.02, and they did go down. But I'm going to make an announcement here, and I'm really serious about this, because I'm in my 8th decade now, heading towards the finish line of this mile furlong race. And if the Dow goes up, it is higher in December than where it is now. It's around 16,000. If it's higher in December, I will stop doing the radio show for TFNN, even though I enjoy it very much, because the stuff that I've looked at is not working, because this is everything that I look at when I do all these charts, long-term, short-term. It doesn't make any difference. It's climbing a ladder, but if this ladder keeps climbing and never looks back, then I've done something wrong with technical analysis. And I'm going to go back to using the 200-day moving average crossing the 400-day moving average. That's what I'm really going to be doing. So it should be okay. The good part about that is I won't be doing many trades, because that doesn't cross, very often. So we'll see, how that works out, over a longer period of time. The one chart that I think that I've posted in here several times, and I'm going to do it again, is that this was a chart that was done by Hussman Economics, and it basically shows the times where we've had these moves where we've had high bullish consensus and very low bearish consensus. In other words, 55% more bulls, 12% or less bears. The fact that we have margin debt at record highs, those are the types of things that we're looking at. And this is the fourth time this has occurred in the last 40 years. It was 1972. It happened again in 87, again in 2000, 2007, and here we are in 2013. And in 2013, it's occurred 3 times. It occurred in May, August, and it's now occurring in November. So what we're having here is that same situation. However, I will mention this, and one of the most I better shut up. I'm not going to do it. Anyway, this is something that looks very, very interesting on a long time. What I was going to mention is there is a very famous person out there who finally threw in the towel and said the market's going to go up forever. So maybe that's the case. I don't know. Our friend Bill Foster, who was on here last year calling for Armageddon, is now calling for Armageddon again. And I don't know how how he's been doing, but he was bearish bonds, which have been going down, but he was bearish stocks, and they've been going up a lot faster than bonds have been going down. So I think he might have been hurt a little bit, but he's still in the game, and he's looking for a market to move a little lower from this level. it's very rare that they have a margin debt this high, where you get to the point where they let the little people win, and that's the basis of all investing, is because they're always the last people to enter. Remember, in 2009, folks, when we were back there, years ago, 5 years ago, as a matter of fact, we were looking at. Oh dear, I lost my paper for it. Hold on a second. I've got to get up a data source here, because I wanted to remind you of the exact opposite of what was happening in the markets, in 2009. And believe me, fear is a greater emotion than greed. And as if you can remember, in 2009, the folks at the Treasury and at the Fed and everybody else were warning us that if we didn't give money to the banks, we would not have any banks, because they were all going to fail, and that was going to be the end of the world as it was. And so that's the bottom line. But at that time, you couldn't find a bull if you had been in a stockyard looking for fresh steaks. It was that bearish at that time. We got a call from our friend Mike in Lakeland. Are you there, Mike?
Yeah, man, dear.
How are you? Well, we'll go on with Mike. We have. I deserve any things that you guys want to say to me. The fact that I've been wrong. It's not a problem. I've been wrong in the stock market here for the last few weeks, and we'll see. But when we were back in 1926, I wasn't trading then. In 2009, we were making this ABCD pattern at the same time, and I was very bullish then. And I mentioned I thought this would probably be the best buying opportunity in 70 years. It happened to be that. But what I'm doing here is, we'll see the market. That's okay. I just have to do what I said. I said all along that when the S&P futures break 1733, and they're a long way from that right now, then I believe that's when the move will start down, and we'll see, if it's going to do that. We'll have to wait and see if that is going to happen. But so far, it's not. We live in Camelot. And the Fed is, continuing to make everything wonderful. They'll keep buying $85 billion worth of bills or bonds every month, and we'll see what happens from that level. Unfortunately, it's not helping the bond market very much, but, that's just the way it goes. Got the Dow up 50, S&P up 5.
It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Sure. Okay, we're back here. Back here, boys and girls. All right. Okay, the next thing I wanted to show you, of course you already know this, is that we have made a higher high than we did in 2009 in the New York Stock Exchange Index. We're still completing the 3-drive pattern with the butterfly pattern on the weekly basis on the NYSE, making a little bit higher high than we did at that point. Whether that means anything or not, I don't know. But, like I said, if this goes up forever, I'm going back to the old 200-day moving average, crisscross, stochastic, MACD, relative strength, Williams, %R. Those have always worked good for me in the past, so I'll go back to doing that, and then I'll work part-time as a pharmacist, so we'll see what happens. March of 2000, I was in I was in San Francisco, one of my favorite cities, and it was a Saturday, and we'd been out Friday night, a bunch of us, traders and stuff, and we had a lot of fun partying, and I probably was not at my best, but I was very, very bearish the stock market at that time, and I was trying to make a point. I'm not going to try to make a point here today. I'm going to try to keep this as professional as possible because of my respect for Tom O'Brien and all the wonderful things they do at TFNN, but boys and girls, I have never been this bearish before. I mean, I'm not getting hurt. Believe me, I've been stopped out once or twice along the way. I've made some money. I've been short gold. That's been working good. I made a really nice play in the euro. That's been working good. And so, I've been short the pound for quite a while. So, I've been doing okay. It's just that the stock market has not turned down yet. I've been waiting for the 1733. I tried it again today in the S&P. It's basically where it is right now at that same point. And the only reason I'm doing that is because we had those Astro days come in on Friday, and then we had the full moon that came in yesterday, and that has a one-day orb. So this market's up on Tuesday. This is probably going to be another wrong trade, and we'll be able to move on. But when the market does start down, you can also be pretty well assured that this little cowboy will have maybe a little trinket or two on the old nose of the horse that's heading towards the finish line on that puppy. But this has got some real bearish indications, folks, with all this stuff that's happening. It's all technical. If you don't believe in the technical stuff, then you might as well turn off the machine, because nobody else sees it. I mean, this is related to how many people are borrowing money, where we stand with bulls and bears, where the patterns are, where the ratios are. I mean, it never comes together like this, this quickly. I mean, and this easily, and in everything. In the NASDAQ, all the things that we're looking at, it does the same thing. I'm just very, very bearish. I listened to Basil Chapman, who I respect so much that you just can't imagine, and he keeps you on the right side of the market, and he should take over my segment until the market turns down, and then I should come back when the market turns down, and then I could probably give you some pretty good advice. But until that happens, I'm going to try to protect you from, stumbling over my little words and not being short, because the key is if it gets below 1733 in the E-mini. That's 60 points away. That's a lot. So, I'm going to be trying it several times before that time, on the way down. That's what I would be watching that for sure, because we've got the Dow up. Still, the Dow's up 46. The S&P's up 3. The NASDAQ's down a little bit. The Russell's up a little bit. So it's very, very quiet. The volume is very, very meager in the stock market here, much like it was with Apple when it was trading around 700 with all the bullish news. And, so we'll see. All I know is I think this is one of the greatest opportunities that has been afforded us since the bottom of 2009. And the good part about this is fear is a greater emotion than greed. So when the puppy does start down, believe me, it will start down in earnest, and it will tell everybody that, maybe something is here, and maybe this goes up forever, and Camelot is here, and Janet Yellen will be known as the Joan of Arc to the Federal Reserve System, which would make me, just incredibly happy if that happens, and that's what she does. That would really be a good thing, in my opinion. We have many of the things that we've been watching, on the commodity front are breaking down. We've talked about gold recently, and, gold cannot get out of its own way. Every time it rallies a little bit, it heads lower. Dow up 50, S&P up 3, NASDAQ unchanged. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and I'm going to talk a little bit about the futures markets here because we have collapses going on in crude oil. I posted that into the room. You'll notice that crude oil is broken below $93 a barrel, which is heading towards the $90 a barrel, which has been our target for quite a while. Gasoline futures are still up a little bit, but gas is under $3 a barrel in Tucson and most other places. We've got a call from our friend in Philadelphia. John, are you there?
Hey, Larry. I'm calling to ask you for something unusual, sir.
You want a recipe for a pina colada?
I would like a personal guarantee.
You got it.
I would like a personal guarantee that the price of silver is not going to zero.
John, I can do that. And the only way I'll get my friends to buy it at a penny an ounce.
There you go.
That way that it won't go below a penny an ounce, because we're breaking down below the October lows now. We've broken, tremendous support here. It looks like it's heading towards, looks like $16 to $14 per ounce in my book. What do you think, John?
Yeah, it was I was kind of, I didn't want to utter those words, Larry, because I was thinking if I didn't say them out loud, I wouldn't bring them into consciousness. But now that you've said it, cat's out of the bag.
Well, we've broken below the 786, and it's just a matter of time before I think gold goes below it. We're seeing we're actually seeing corn now breaking below the 1.618 expansion. That we had. We had a little bit of a rally of about 20 cents last week, and then the EPA came out in corn, and now corn is trading below 5.15 a bushel. I mean, John, I look at these commodities. It seems impossible that everything is dropping in the commodity markets. We have deflation going everywhere, with the exception of the fact that the stock market keeps going up.
Larry, to that point, I'll just share one thing that just occurs to mind. A great analyst out in the L.A. area by the name of Jim Flanagan. Jim is a very astute, very disciplined trader analyst who does nothing but analyze price history going back centuries. And his work had been indicating a major bottom in commodities with a major surge that was already due to have unfolded and been underway here, and that was combined with a continued bull move in stocks. So I just share that with you because I have seen throughout my 30, 35 years of trading numerous examples where cyclical forces suggest one thing's going to happen, and when it fails, when it does not, it indicates very extreme power of the trend in force. And in the case of commodities, be it grains, be it precious metals, energies to a lesser extent, the force, the trend in progress, of course, is down. And the fact that commodity prices, generally speaking, are not following the cyclic influences of turning up indicates the severity, the power behind the bearish forces at work. So I'm always respectful of those sorts of phenomena, and just share with you, I would not be holding commodity long positions that are going against me. It doesn't mean you can't try for short-term buys, but if you're wrong, I stop myself out, take my lumps, and stand aside. That's the message I'm getting when I'm looking at price action and Flanagan's work.
Me too. Well, listen, John, thank you for calling in, my friend. I certainly appreciate it, and your call on corn is still one of the best of the year.
Larry, thanks so much. I appreciate it.
You bet. Okay, we've got a caller from Singapore. Our friend William is there. William, are you there? Must have lost William. We've got another one from Florida. John, are you there?
Hello.
Boy. Yes.
Hello. Hello, I'm still here.
Oh, William, how are you? What can I do for you today, my friend?
Yes. Oh, no, I'm very excited about your Tesla call. Your Tesla. You know that you have called on the down moves to about 122 to 123. And we are quite close to it.
Yes, well, we're trading at around 127 in Tesla today, so that was the farthest expansion that I could see in Tesla. But of course, if it goes below that, it can go a lot lower. But that was the lowest projection that I could get based on the expansions of the things that we've looked at.
So in other words, when we are coming close to your call at 123, we should actually close our position and then monitor from there.
Well, very good. Well, just be careful if you go long, William, because you have to use a stop in these things because, like Apple, it dropped a whole lot more than people were expecting, and Tesla could do the same thing. It could easily expand those patterns because it went from $9 a share to $194. So just be careful.
Well, at the moment I'm on short, and I'm just wondering,
Then stay short, my friend. Stay short because it looks lower to me.
Oh, okay. So I did not have to actually, close a position. I just monitor, as when it comes close to your support level. Am I right to say that?
That's very good. Listen, William, thank you very much for calling in. We always like to see you calling in because I know it's in the middle of the night there, and it's awfully nice of you to stay up this late.
No problem. My pleasure. Thank you very much.
Thank you for calling in.
Thank you.
Okay, we got a call from John in Florida. Are you there, John?
Yes, Larry. How you doing today?
I'm good. What can I do for you?
Before I ask you about PII, when will your retirement party be? Will OB1 be having a party?
I'll tell you, I won't retire from trading. I just retire from doing the show because I'd be losing everybody too much money because this market will not turn down. That's basically the bottom line, and I don't want to embarrass Tom O'Brien by being, bearish in a market that goes up forever. I'm not, my trigger mechanism was 1733, and now we're 60 points above that, so it's pretty hard to, with a straight face, to be bearish. But, that's what I'm saying. If it's higher in December, I'm really serious. I've got a lot of other things I like to do with my life with, two beautiful little grandkids and all the traveling that Sarah and I do. So I'll probably do more of that. And but anyway, it's a little frustrating to me because I get so many emails telling me what an idiot I am, and they're right. I am an idiot at times, but there are other times I'm not so much an idiot. But I have to shake it off and go. I'm having a bad day today, not because I'm short or anything. It's just because of a few other things that have happened recently over since yesterday and today. But I'm actually okay. I'm just in a rare mood.
Well, that's good. Well, as you know, we used to just trade. It used to be among the traders, speculators, and investors, and now we've added the central bankers, and that's something that I don't think most of us know, how to trade with them as the player of. They're the ones running the casino. They're the financial concierge for the markets.
John, if that's the case, we're in bigger trouble than I could ever dream, because that's what happened with long-term capital. They had all those positions on and they couldn't unwind them. And if the Fed has done that, then there's going to be something, and this is a giant experiment. Then that could be the big problem that no one sees. When someone sees it and they start to report about it, then and other people start to see it. That's when it'll probably unwind. But no one has omnipotent power in these markets. I firmly believe that. We have countries like Japan and China and Russia and other places that have their money invested here, and if they start devaluing the dollar, all hell's going to break loose, and then the Fed's not going to have many bullets left to try to prepare it. I mean, they've just been perpetuating this asset bubble, and it's their bubble. This is going to be known as the Fed bubble. No question about it.
Well, I think you and I both know they've been devaluing the dollar for the last 10 years. They took it from $1.20 down to what, 80 cents? That's a 33% haircut.
Yeah, they certainly. In fact, they went to 75, I believe, if I'm not mistaken. And if they continue to do that, it's
well,
it's
then we'll be like Zimbabwe, won't we?
Oh my God, let us hope not.
Except,
we don't really want to do that, but if it happens, that's what happens.
Well, we'll be Zimbabwe with nuclear weapons.
Yeah, well, all I know, John, is I keep Claymore mines around my house, and if anybody wants to come in, if they can trigger those Claymore mines, more power to them.
There you go. Well, hey, all the best, and please, if you're going to retire, let OB1 know that after, if you've been at it 8 decades, that at least he should throw a party at Burns Steakhouse. My brother and I would like to come over there and have a couple of steaks on OB1.
I'll take that bet. That'll be great. So thanks for calling in, John.
While we wait for the S&P to touch 850 again.
Okay.
There you go. Thank you.
Thanks for calling in. We got a call from Dave in Escondido. What can I do for you, Dave?
Question here for you.
Yes.
Why would anybody want to leave Pismo Beach?
the police reports. They just kept coming and coming, and I couldn't get away from them. I mean,
Well,
my
they weren't
pictures,
after you, though.
my pictures were on every post office along that area, and it just I was running away from the law so much that I had to get out of the country.
Larry, I can't think of a better. I can't think of a better place to live than Pismo Beach.
There is none. Pismo Beach, San Luis Obispo. My daughter and my grandson live in San Luis Obispo. They're coming here next week with my other daughters coming in from Denver, and I've hired a balloon, and we're going to take a balloon ride for the day, and we're going to take it all the way to the Grand Canyon and back. They're going to serve us a nice lunch, champagne brunch and stuff. So we're going to be on a balloon about a mile high or more, going over Arizona and the Grand Canyon for holidays. I'm going to treat them to that. So,
Larry, there's a biplane that flies up out of Pismo Beach that flies over the state park there, and there's a resort right on the beach. Are you familiar with that biplane? He does flip.
The name of the resort is the Cliffs Hotel. I've stayed there many times. Yeah, I know the place very well.
Yeah, Larry, you're the man. You're the man. As a matter of fact, I've been following you, and I'm short the Dow now. It has certainly been eating me up, but where from here, Larry?
Well, today's a full moon, or yesterday's a full moon. If it doesn't turn here, it could go up another few days and stuff. I don't know, but the long-term patterns, Dave, are so bearish that I just look at them and I say, well, I might have done something wrong here, but I don't think so. And I just keep looking at them. Over the weekend, I look at absolutely everything that I possibly can. And now I'm by myself. There's very few people out there. Mark Faber, who used to work with me when I was at Drexel, he ran the Hong Kong office. I ran the Beverly Hills office, and he's as bearish as I am. And with Proctor throwing in the towel, that was actually some good news for me, because that would usually be the case when he's that frustrated. And I'm frustrated the same way, but not the same thing, because I haven't lost, if I'd have lost a great deal of money along this way, then I would be a little frustrated, but I'm not too much. I meet with my friend Mark Douglas at least twice a week, and I talk to him about the positions and what we're looking at and everything, and I know, what my risk parameters are and everything, and but the thing about the radio show is I don't want to hurt anybody. And if it goes up, I wouldn't have anything to say other than, buy a dip. And, hell, I wouldn't know if I saw a dip. I mean, I haven't seen one in the market in 3 months or something, so I wouldn't know it if it bit me.
Larry, last thing I'd like to talk to you about. You always sign off with a God's blessing. Are you a Christian?
Well, I used to be until the Dow went up today. Yeah, of course I am.
Okay. Well, I enjoy you, Larry. Thanks a lot for all you do.
Yeah, thank you. That quote that I have is, live every day in an attitude of gratitude and may God bless, comes from my friend Tony Robbins. I was one of the first people to latch on to him. Okay, we're going to take a little break here, folks. The Dow is still smoking, up 40. S&P up 3, and the NASDAQ down a bit.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and I posted into Tiger TV a long-term continuation chart of bonds going back 32 years. If you recall, a year and a half ago, Mr. O'Brien and I, against all legal precedent, we made a bet that if the Treasury bonds got to 160, I would take a ride on one of his yachts. And I said I would, because and most of you that know me, if bath water is more than a quarter inch deep, I'm a little afraid of water. So I told him I would ride on the boat. If on his yacht, if the bonds got to 160, they got to 154, and now they're at 132. So I didn't have to see that showing there. Oh my gosh! Anyway, we'll see what happens. That was a very bearish pattern at that time. And it turned out to be okay. What I'm looking at in stocks, folks, is far more sinister than that. It's really bad. I'm wrong. Maybe I'm wrong. Yeah, but it's still really bad. We'll see. If it goes into December, then I'm certainly going to be wrong. And but that's 6 of one, half dozen of the other. We still got the Dow up 42. The NASDAQ is down a little bit. The S&P is up a couple. not much else is happening. Gold's still breaking down. Silver's still heading into the toilet, and copper is getting ready to break, a little lower. Someone asked me how far we could go down in the stock market. I believe we'll take out the lows of 2009. And I don't know if that'll happen or not, but that's what the chart will say. And that'll be life-changing for a lot of people if I'm right. So, we'll see if that's the case. There's not many people out there that are looking for anything like that, but in 2009, when the market was bottoming, I said it would be the biggest rally in the history of the stock market, short covering, and it certainly did. We've got tremendous negativity across the commodity markets, folks, and that means people ain't buying this stuff to build the products. That's the flat-out bottom line. Where's the business going to come from? Okay, I know it's going to be a great, wonderful selling season and everything like that. We still have a little bit of a, internet-type bubble with Google and Netflix and Facebook and what was the new one? Twitter, Twingle, whatever it was, Twitter. And but who knows whether that's going to be the case or not? All I can tell you is, it's coming. It's coming. I just don't know exactly when, but you just want to get ready, because when it happens, it's going to be a little bit of rock and roll. That's the way I look at it. Treasury bonds are having a pretty good rally now. We've bounced from the 128 level up to 135, and we still could make the 137 level in Treasury bonds, which I think would be a really good place to, institute a short sale in this. So keep in mind, with the government, sometimes what the government tells us is not actually what they're doing. I've heard that in rumors. I'm not sure, but sometimes when the government tells us they're doing A, they might actually be doing B. I don't know if that's the case or not. The other thing that makes me a little concerned is, why do we have 42 million people on food stamps?